And good morning and welcome to Business Morning. I'm Ladi Williams.
And I'm Chimeze Obi Iwago. Thank you for joining us. Well, we'll tee off from the global oil market as prices jumped by more than $1 this morning as U.S. output was slow to return after a deep freeze in Texas shut in crude production last week. Shale oil producers in the southern United States could take at least 2 weeks to restart the more than 2 million barrels per day of crude output that shut down because of cold weather as frozen pipes and power supply interruptions slowed their recovery. Brent crude was up $1.06 at $65.30 a barrel after earlier hitting a high of $66.38. U.S. crude rose 81 cents to $62.51 a barrel after hitting a session high of $62.73. Both benchmarks have risen more than $1 after climbing nearly 4% in the previous session. Goldman Sachs Commodities Research raised its Brent crude oil price forecast by $10 for the second and third quarters of 2021, citing lower expected inventories, higher marginal costs to restart upstream activity, and speculative inflows. The Wall Street Bank expects Brent prices to reach $70 per barrel in the second quarter from the $60 it predicted previously, and $75 in the third quarter from $65 earlier. Morgan Stanley expects Brent crude prices to climb to $70 per barrel in the third quarter on signs of a much improved market, including prospects of a pickup in demand. Stockpiles of U.S. crude oil and refined products slightly declined last week due to the disruption in Texas. Well, seeing the oil price go up, Nigerians are in for it. Well, even though Labour has been arguing that they would not accept any hike in petrol price, but I wonder how that is going to happen because
No subsidy
has to go. But then I think it's time for government to really show some leadership there. Cut down cost of governance. Perhaps that might help.
Do a lot for us. And the leadership of the National Assembly has held a meeting with the Finance Minister, Zainab Ahmed, over the implementation of the capital component of the 2020 budget, which was extended to March 31st this year. During the interaction, the Finance Minister disclosed that 30% implementation has been achieved on the extended capital component of the 2020 budget. You take a listen.
It will be unreasonable to expect that the exchange rate at the NAFEX window will be the same as the exchange rate in the black market. But we do have to plan, and this is the monetary authorities that that are handling this, to plan to work as quickly as possible to close the gap that now is almost about 100 naira. On the fiscal side, it will be to our benefit because it means we'll be able to realize more naira that we'll be able to use to run the economy.
Well, it's good that the fiscal authority is realizing the need for unification of the currency at this point. All right, the Senate Committee on Banking, Insurance and Other Financial Institutions is expected to meet with the leadership of the Central Bank, the Securities and Exchange Commission and the fintech community today over the recent ban on cryptocurrencies transactions in the country. The resolution of the upper chamber is sequel to its consideration of a motion titled CBN's decision to stop financial institutions from transacting in cryptocurrencies and matters arising. On February the 5th, the CBN announced a ban on cryptocurrency-related transactions, while a representative of the International Monetary Fund recently backed its decision, citing concerns over money laundering and drug trafficking. Earlier, the financial market regulator had in January 2017 and February 2018 issued directives which warned banks not to use, hold, trade, and/or transact in cryptocurrencies.
It'll be interesting to see how that...
that skepticism continues, considering what's happening to Bitcoin now. Perhaps, we'll talk about it much later.
From the big drop.
On the program, yes.
But at the end of the day, it's a hedge against inflation.
Well, still the risk is still there because the speculative tendency is quite high. Even the U.S. Treasury Secretary said it. Janet Yellen has warned.
She has been preaching against Bitcoin. Meanwhile, the United Nations has asked the federal government to invest in technology as plans to support Nigeria's digital economy sector. The UN's Deputy Secretary General, Mrs. Amina Mohammed, made this disclosure when she met with the Minister of Communications and Digital Economy, Issa Pantami, in Abuja. Mrs. Mohammed explained that technology is the lifeline of all other sectors. She maintains that the National Digital Economy Policy is important within the framework of the 2030 Agenda on the Sustainable Development Goals of the United Nations. Do take a listen.
The United Nations Deputy Secretary General arriving the federal government's digital economy complex as she continues her courtesy visits to key government officials. The meeting afforded the UN envoy the opportunity to discuss the issues for rights protection as the nation continues to improve her digital economy policy.
This ministry is integral to every other sector, so if we want to look at the rights of people, we want to reduce poverty, we want to look at gender equality, we want to look at consumption and production in the way in which we move our economies. This is going to be what brings efficiency. This is what is going to bring connectivity, leaving no one behind. And this is also going to be an investment in the green transitions.
Digital economy plays a major role in the attainment of the Sustainable Development Goals, especially as it concerns women. And the ministry is working to bridge the gap.
This is another area which we feel we need to be supported by the United Nations in any way possible. We need to bridge the gap, particularly with regards to women as well. We have a program that we call Women in ICT, where we collaborate with the Ministry of Women Affairs and other state ministries, train women on ICT.
The UN envoy is promising that all the necessary support will be given to Nigeria to ensure that no one is left behind.
Well, the Lagos State recently concluded its 2021 Economic Summit with a theme for a greater Lagos, setting the tone for the next decade. And one major takeaway from the summit is the federal government's commitment to support more massive investments in the state to boost its economic potential as one of the world's fastest growing megacities. And the fact that Lagos makes a significant contribution to the Nigerian economy, contributing about 30% to the country's GDP. So what will this mean for the state? How can the state harness its potentials? The state's Commissioner for Economic Planning and Budget, Mr. Samuel Egube, joins us now. Good morning. Thank you very much for joining us, Mr. Egube.
Good morning.
Good morning.
Morning. So your 2021 Economic Summit had the theme for a greater Lagos, setting the tone for the next decade. What message are you trying to pass there, and how apt is it at this time?
Well, the world is changing, and it's changing very rapidly. And it's important that as Lagos, which is a leading light in Nigeria, we need to begin to set the tone for the next decade to accommodate the massive changes going on across the world and to prepare our people for the nature of competition that is ahead and the kind of economy that will stand its grounds in the future. As you are aware, you have the African Free Trade Agreement going on. You have all kinds of, you have the pandemic still on, and the need for a digitalized environment going on and changing the way we interact. So that's what it means for Lagos. The people who are stakeholders to Lagos now needs to come together, and they did come together during Ehigbeti to say this is the way we envision Lagos to be, and these are the various roles that the government should play, the private sector should play, and the civil society at large.
All right, Mr. Egube. Lagos is the commercial, investment, travel and maritime hub of West Africa and Nigeria. In fact, it is considered a mini national economy. The state government presented a 26.52% increase in its budget for 2021, which it called the Budget of Rekindled Hope. Why is this significant to Nigeria and the indigents of the Lagos metropolis?
Because hope is very important in a time of despair. And that budget is significant because it's a large one, it's a milestone type budget. And basically what the budget is saying is that at the heart of it, we need to look at our people. We need to begin to build human capacity. So your oil or your solid minerals and all of those natural resources will be meaningless if the people are not prepared to convert them into value. And Lagos is the most populous state by population, by far, and the smallest by geographical area. But we've positioned ourselves as a state that is the gateway to Nigeria by the world, and also a pathway for Nigeria to the world. So it's important that we, this budget tends to drive very aggressively human capital development, which we put an additional 33% in our human capital development, and focused a lot on women development and also vocational and technical based skills acquisition to basically prepare our people for the market. As we transition into the African Free Trade Zone, it's important that in that zone, it will not be about nationalities, but about cities. And therefore, Lagos must play that unique strategic role for Nigeria to compete with other cities across Africa for competitiveness and market share. So this budget begins to prepare the infrastructure. You can see that we've put in about 291 in infrastructure, a growth of about 38% from prior year, to just get ourselves running. So you see the investments in the deep sea port, you see our investment in the rail infrastructure, both the red line and the blue line, that will move a total of 32.5 million people when completed in about 2 years' time, from both Okoko to Marina and from Agbado to Marina, shortening the journey time by about 250%, from about 2 hours journey to about 45 minutes. That way we increase the productivity of our people. So it is focused on people development, it's focused on youth engagement, so that our youth, which is a significant amount of our population, will participate in this coming competition that is coming, and will then play that significant role as an economic and a financial hub for Africa, as our vision does state.
Now, Lagos State has the highest foreign debt profile among the 36 states, and the FCT accounting for about 5.64%. How have you been able to manage your debt?
I think that what you should be looking at is not the size of the debt, but the amount of debt service compared to the kind of revenues you generate. And I will tell you, we have maintained our debt sustainability ratio at about, it was 19% last year and 22% this year. We believe we will manage it. We have very, very strong financial managers in cabinet. Mr. Governor himself has very strong antecedents in corporate finance. And we have the Commissioner for Finance and myself, all who have very strong financial history. And it's within that capacity that we keep managing our financial situation in good light. Like you know, last year we did negotiate, right, our debt portfolio, reducing interest rate from about 18% average to low 12%, and so in some cases below single digits. This year, again, we've just closed another transaction to review downwards and work downwards our interest rate. So we are quite tight on our monetary cost management, and in general terms, how we manage those debts. And therefore, we stayed within our sustainability. The benchmarks really are about 40 and in some cases 30, but at 22%, we have significant amount of room to do more for the people of Lagos, so that we can fast track our infrastructure and capital investments to allow small and medium businesses get some efficiencies and grow, and therefore are able to employ a lot of people and develop the entire human capacity indices and livability indices in Lagos.
And most governments fall back on tax to improve their revenue. For a state like Lagos, how do you think the government can boost its revenue other than through tax means?
Well, governance is really about taxes and the rule of law, right? And for Lagos, we still have significant amount of room to rein in on taxes. And what I mean is that we can optimize the amount of and bring into the tax net a lot of people who are currently either not paying taxes or are not paying the right taxes. And the rule is, first of all, make it easy. So we are focusing on, first of all, simplifying the process and then digitalizing the process so that it is easy for those who want to pay to render their returns and pay the appropriate taxes. We're also trying to remove out of the system a lot of discretion so that everybody sees that we are running a very transparent system in terms of our tax administration. So transparency and sustainability are the hallmarks of this government. And we intend to continue to pursue that. We believe that if the process becomes simpler, if it's digitalized, people can easily pay their taxes, then we'll be able to get more people to pay taxes. And we really believe there are huge pockets of tax increase opportunity. And I'm not talking about an increase in the tax rate. I'm talking about an increase in the collection mechanisms, right? And that's exactly how we believe the tax collections and revenues will go up. We also intend to ensure that there's significant improvement in the general organization in terms of our urban and physical planning. And once things get organized better, you then find out that leakages are stopped and the productivity of the tax collection and administration process throws out more revenue from those taxes and levies without necessarily increasing rates.
All right, Mr. Igube, just a quick one before we let you go. Now, many states are reneging on the payment of the new minimum wage. How has Lagos State been able to keep paying when others are not?
So as a state, we are an extremely robust state in the way we manage our finances. And that's the reason. You can see, for example, we're spending a lot of time renegotiating our borrowings to try to save on interest expense. We're spending a lot of time in trying to run a more efficient government, right? To try to adapt very quickly to changes. A lot of our meetings right now are online and virtual, right? We are one innovative state and we are always reinventing ourselves. And that is why we are able to keep ahead, right? Like I said at the beginning, to be an example, right? And to ensure that we pay those salaries. Those salaries are basically living wages. And if we are going to be focusing on human capacity development, you must also ensure that you are paying those kind of wages that people can at least just have a living and eke a living. And therefore, you must organize your government and organize your management, both financial management and other forms of management, to just ensure you're on track in making this happen for the people of Lagos.
All right, thank you very much, Mr. Samuel Igube, Commissioner for Economic Planning and Budget, Lagos State. Thank you very much. We do appreciate your time.
Thank you very much.
We'll take a break, and then when we come back, we'll look at the commodities market update. To stay with us.
Welcome back. Now, Damilola Kimbami, Head of Research at Financial Derivatives Company, joins us now for the commodities market update. Hello, thank you for joining us, Damilola.
Good morning. Thank you for having me.
Good morning. So oil prices have remained high. Implications being Nigerians may pay higher for petrol. How will this impact the commodity prices?
Yes, so oil prices, like you rightly said, global oil prices are trading around $66 per barrel. And because Nigeria imports all of its refined crude, so that has significant implications for the pump price of oil. We know right now that the landing cost, which is one of the factors used to determine the final price of petrol, the landing cost has increased about 186 naira per liter. And that's because global oil prices have increased. And also the exchange rate is much weaker now. It's trading at 410 at the I&E window and trading at 478 at the prior market. So what this means is that definitely petrol prices ought to increase, especially since the government has said that the downstream industry has been deregulated. So that means that that industry is now subject to the forces of market demand and supply. And what this means for commodities is that transport fares would increase, despite the fact that the trucks that actually transport these goods from the farmlands to the market are diesel powered. But, even from, let's say, from a major market to the minor market to households, everyone uses petrol. The small and medium scale enterprises, when they're running on their generators, they use petrol. So it has significant impact on consumer prices. And we're most likely going to see consumer prices increase as a result.
Now, we've seen Labour continuing to drag the issue of PMS hike and, of course, the hike in electricity tariff. But the question is there an alternative, to these reforms that the government has tried to put in place, considering the fact that, look, we cannot go back to the days of the so-called subsidy?
Yes, like I mentioned earlier, the government has said that the industry is deregulated. So that means that there shouldn't be controls. We shouldn't be talking about subsidy. And the thing is, the issue right now is that there needs to be transparency. There's a pricing template, there's a methodology. So if all prices are increasing, we expect to see that the landing cost and the overall price of petrol should increase. But what happens also when global oil prices decline? Do we see a resultant decline in pump prices? So I think that is the issue right now. And I know that the average Nigerian would rather pay that exorbitant price than to have to queue, than to have to spend hours queuing for petrol, and at the end of the day now still spend so much on petrol prices. So I think right now the issue is, one, the government needs to focus on maximizing the benefits that would occur as a result of removing subsidy, as a result of removing these controls, and find a way of minimizing the adverse effect on consumers, which is the inflationary impact. And also, we keep talking about the petroleum industry bill. This bill has been stuck in limbo at the legislative arm of government. What is happening with that bill? That is a very significant oil reform that, when passed, would unlock a lot of investment. And the solution, or rather, let me start from the problem. The problem is that Nigeria doesn't have any functioning refinery. The four refineries are not working. So Nigeria has to import all of its refined crude. We know Dangote's refinery is expected to start operations this year, which is good. That is about 650,000 barrels we should expect. But that's just one refinery. So what we need more companies, more organizations to actually invest in this industry. And what would attract investment is policy clarity. There has to be certainty, there has to be transparency. And I believe that this would unlock the necessary investments, and we will begin to see that Nigeria's dependence on imported fuel would reduce.
And you did mention inflation. Already inflation rate is galloping and food inflation is skyrocketing. What does this portend for the inflation trajectory?
Yes, so fuel prices, or let's say transport fares, they are part of a subset of the core inflation. And we know that core inflation increased about 11.87%. But also, fuel prices have an impact on food prices. And we've seen that food inflation has also crossed 20%. So what we're going to see, if at all this pump price is increased above its current level, we're going to see the prices of consumer goods remain elevated. And the Nigerian consumer is already constrained. Is facing high unemployment, is facing lower disposable income, paying higher electricity tariffs, and now petrol prices. So it's a lot on the Nigerian consumer, and inflation definitely is going to increase. But by and large, again, if the government, because the government is spending a lot because when it was paying subsidy, it was spending a lot. These funds can be channeled towards other avenues. How can you invest in infrastructure? Because one thing again is that do we have the necessary road connectivity, the transport connectivity to improve and boost output and productivity? If that happens, we'll see output levels increase, and that will reduce prices in the medium to long term. So in the short term, yes, consumer prices are going to increase, but as output and productivity increase and improve, we should see inflationary pressures decline in the medium to long term.
I guess possibly we may be talking about this particular issue for a very long time, because we're now having Goldman Sachs predicting that oil prices will climb to about $70 in the coming months. But seeing the trajectory now, seeing the way the prices are going, currently at $65, do you see that going higher than that $70?
Well, there's always that possibility. Right now, what is actually pushing oil prices up is the Texas freeze. We're all aware of the bad weather that is occurring in Texas, which has led to a shortening of U.S. oil production and refinery activities. And the U.S. is the largest oil producer globally. And this cold weather has actually led to a reduction in the U.S. production of about 4 million barrels per day. That's almost 3 times Nigeria's production. So right now, that is what is contributing to that price increase, coupled with other OPEC's output cuts and Saudi's 1 million barrels output cuts. But bear in mind that Saudi is planning on reversing that is 1 million barrel cut. So if that happens and it increases its production, that would weigh on market fundamentals. Also bear in mind that there are speculations that Russia and Saudi may be at loggerheads again towards their meeting. They're having another meeting next week, Wednesday and Thursday. Saudi, on one hand, is proposing maintaining status quo and keeping the production cuts at current levels, while Russia is pushing for a further ease. Depending on what happens, that would also influence oil prices. So I think for the rest of this week, we're going to see oil prices trade around the average of $66. But next week, depending on the outcome of the meeting, depending on what angle they slant towards, that would also determine whether prices will keep increasing towards 70 and maybe beyond, or we'll see oil prices fall.
And even though oil prices are going up, Nigeria's external reserves still keeps declining. Why is this?
Well, we know that the central bank has increased its forex supply in the market. And if you look at the average daily turnover at the I&E window, which was about $56 million, which was less than Friday's figure of 66, but compared to last week's average, is still higher. So we're saying that the CBN is gradually increasing supply in the forex market, and that to an extent is also explaining why we're seeing that depletion in external reserves. And the more the central bank continues to increase supply at that rate of 410 at the I&E window. So what that means is that the CBN is indirectly also mopping up liquidity. And as Naira liquidity continues to be withdrawn from the system, we'll see interest rates increase. And we're already seeing that. Yesterday, the money market instruments of open buyback and overnight rates, they were trading at an average of 15%. So we're going to continue to see that the more the CBN sells dollars in the market at 410, the more we see Naira convergence, the more we see liquidity being mopped up and interest rates will start to increase further.
Okay, let's go back to what you also have as your burning economic issues there. You talked about the pound. Of course, yes, we saw the pound hit its strongest level in 3 years yesterday. How does that impact Nigeria and the domestic commodities prices?
Yes, so the UK is Nigeria's 8th largest trading partner in terms of imports. And what Nigeria imports from the UK is about 2.5% of total imports. And if with the pound strengthening, that means that the countries that will be purchasing the UK's goods will be buying it at a more expensive rate, meaning that Nigeria's imports from the UK are going to be more expensive because the pound has strengthened. But with that said, UK is a major market for Nigeria in terms of remittances. And we know that as the news was released this morning that the UK's unemployment rate increased to a near 5-year high of about 5.1%. So that is significant for Nigeria because if unemployment rate is increasing, that means more people are out of jobs, which would affect remittance flows. So I think it's a major thing for Nigeria and for commodities. So whatever we're importing from the UK, as long as the pound continues to strengthen, it would lead to an increase in our import bill. But the UK right now is on track to be the first major economy to be able to inoculate its adult population. And as it continues to vaccinate and inoculate its population, it increases the chances of it removing its lockdown and the recovery process starts. And Nigeria stands to benefit from a recovery in the UK economy because of the bilateral trade agreements.
All right, and wheat prices are up on the global market. So we should be ready to pay more for commodities such as bread, pasta, or lower quality?
Well, yes, we should expect to see that because Nigeria imports basically most of its wheat output. So definitely, with wheat prices are increasing globally, it will filter into the price of flour, which is about 14,500 naira per bag right now. And we expect to see that trickle into increased prices for commodities such as bread. If the prices remain stagnant, then what we're going to see is that the size of such commodities would reduce. So manufacturers have two options: either pass on the cost of higher prices to the consumer or bear the cost and reduce the quality and the quantity.
Okay, and of course, cocoa being one of Nigeria's major commodity export, we can see dry weather affecting Nigerian cocoa. That's not good for our cocoa exports.
I agree with you, that's not good. And we've seen that so far this year, we've had very little or no rain, which is typical of the season, where usually towards the end of the Harmattan season. And that is affecting cocoa output because cocoa thrives in moisture. And in the Southwest, which accounts for 70% of the nation's cocoa production, has been affected significantly. And like you rightly said, we will see a reduction in our cocoa exports. Cocoa is Nigeria's third largest agric export, and we just talked about external reserves declining. So obviously, the more export earnings continue to decline, like for cocoa, it would affect the accretion in the external reserves level.
All right, take us through the domestic commodity price movements and their drivers.
Well, right now, for some commodities, we are seeing a decline. So, for instance, tomatoes, despite the fact that this is the planting season, which is not surprising. We know that typically, usually when tomato prices increase, that's usually around the second quarter of the year, which is the peak of the planting season. So we're seeing that happen for commodities like cement. Once the rains start to occur, we're going to see cement prices increase. We're going to see cement prices actually fall. And why is that? Because the demand for cement would actually reduce, because once the rain starts, you see lower construction works, because construction works will be affected. So that is going to affect cement prices down the line. We've talked about flour. Obviously, as global wheat prices continue to increase, that will affect flour prices. So right now, commodity prices in general will be affected, one, by the dynamics in the global commodities market. They'll also be affected by the price of petrol, which we are expecting to increase. And if transport fares increase, it will filter down into the cost of consumer goods.
All right, we'll continue to monitor that. We'll continue to watch the trend in the commodities market. Thank you very much, Dami. We do appreciate your time.
Thank you.
Okay, let's look at the market. Well, Eddie, I wonder what is upsetting investors at the equities market. They have refused to turn green. Is it all about the fixed income market yield?
Chibi, I wish I knew, but I would also believe that it's about the fixed income yield. Yesterday, at midday, we saw the market positive, and some of us kept our fingers crossed. Hopefully, this would be the beginning of the bulls in the markets, but at the sound of the closing gong, we still saw the red. So I don't know what's going on. Analysts have said, with earnings coming into the markets this week, we would see some positive sentiment.
And I thought so. I thought that was going to start yesterday, but I didn't see that.
No, we saw some earnings. We saw from United Cap, and I'll talk more about that with David Adonri, but we saw some earnings yesterday. They did well. They announced dividends, but that stock declined. So we don't know what's going on in the market and what's going to, boost investor sentiment at this time. But the market was down 0.08% at 40,154.09 points, while the equity cap was at 21.008 trillion naira. But just before we talk more about these numbers, let's talk to David Adonri, a stockbroker at High Cap Securities. Good morning, Mr. Adonri. Thank you for joining us on the program.
Always my pleasure being with you. Good morning.
Well, so yesterday we saw United Cap release its earnings, higher revenues, higher profits before tax and after tax. What stood out for you the most in those numbers?
Yes, the dividend payout was very, very fantastic. So, Nigerian investors are usually excited about dividend payout. So the 70 kobo per share they paid yesterday returned over 10% dividend yield, which is higher than the average yield on bonds. So in which case the risk that is intrinsic in equities has already been compensated for in the dividend yield that we have seen with UCAP. Very, very impressive result. Yesterday there was no reaction, but today we already started seeing reaction. So this is what we call a delayed reaction. And that reaction is ongoing as we speak, as more investors are demanding UCAP. Yeah.
I'm glad you mentioned there was no reaction yesterday, because I was about to ask you if they announced such impressive dividends and we saw investors sell down on the stock because that stock declined yesterday. But this week, we're expecting more earnings in the market. So are we likely to see more positive sentiments this week?
Yeah, it will depend on how early the result hits the market. If the result comes to the market probably at the closing moment of the market, in which case several investors do not really have enough time to react. So, but having had the information now since yesterday, a lot of people are now aware of what has happened, and hence we are seeing the reaction. But this week and a little further, we are going to see results hitting the market. And we are going to see boys being separated from the men, because those securities that pay out good dividends are likely to attract a lot of interest from investors. And those that fall by the way, that are laggards, are likely to fall by the wayside, with time. That's how the market is going to play out now.
All right, Mr. Adonri, thank you for your input on the program. David Adonri is a stockbroker at High Cap Securities. Now, the market was largely pulled down by the 8% decline on WAPCO yesterday. We saw lower volume, which was down by about 5%. However, we saw higher value and deals traded. The sectoral performance was mostly negative. The banking sector was up as we saw gains from most of the tier 1 lenders, although marginal gains. Consumer goods was down, and that was single-handedly dragged by Unilever. Industrial goods was down 0.55%, and that was due to the 8% decline on WAPCO. Insurance was down, while oil and gas gained yesterday. The unlisted securities market was also negative yesterday, down 0.94% at 710.72 points, while the market cap was at 509.95 billion naira. We saw about 85,000 units worth 18.25 million naira traded in 11 deals. Now, the bond market continued its bearish trend yesterday as we saw yields increase in that space compared to the previous space. And I'm sure probably that's why investors are still holding a wait-and-see stance at the equities markets, because we've seen a rise in yields in the bond market. And currently, average yields were about 10% yesterday. We had 21 deals worth 9.50 billion naira. The Nigerian Treasury bills market was a bit flat yesterday, although we saw 6 deals in that segment worth 11.51 billion naira. But to talk more about the market is Ramat Baba, the chief dealer of fixed income at FBN Quest Merchant Bank. Good morning, Ramat. Thank you for joining us on the program.
Good morning, Edidian.
Considering the higher yields at the various auctions we saw last week, what should we be expecting from demand at the bond market this week? And of course, that will translate into what we see at the Treasury bills market. So what should we be expecting?
Okay, so I'll start with the NTB market, the Treasury bills market. There's an auction tomorrow at the last auction for NT bills. The stop rate for the 1-year bills at 4%, which is considerably higher than what it was at the previous auction. Consequently, the same market trading higher, yields have been trending up on the NT bills. So the almost segment of the market, that's the Treasury bills market still, we've seen yields going slightly higher for the 1-year OMO bill, while for the long end, while for the mid and short end, yield has pretty much remained kind of flat. In the bond market this week, we've seen pockets of demand coming in. Not like this demand is a whole lot, but demand seems to be going around. As a result, we've seen yields coming slightly lower over time, and this kind of started last week, towards the end of last week, and it's been on yesterday, and this morning is still the situation. However, I'd like to mention the fact that the CBN Special OMO bills matures on Monday, that's the 1st of March. And expectation is these bills will be converted to bonds. The implication is that there might be, we might see a reversal, yields might start going up or something, but that's for us to watch and actually see what really happens. It's just market speculation. So.
Ramat, I guess we'll all be watching to see what happens in the markets. Thank you for your input on the program. Ramat Baba is the Chief Dealer of Fixed Income at FBN Quest Merchants Bank. But Timmy, we'll keep watching to see what happens in the fixed income markets. Well, hopefully it gives some breather for the equities market, because this red that we're seeing is not impressive at all.
And of course, taking it from what Andori said, separating the boys from the men, let's see how that goes, and let's just hope that the men will just push out the bull from hibernation eventually. Okay, we'll take a break, and then when we come back, we turn to London. All right, let's bring in Juliana now for update from the streets of London. Good morning, Juliana. Well, we're going to kickstart this conversation with the rate of unemployment in the UK, which rose to 5.1% in the 3 months to December, according to the data this morning. Do we have more details on that?
Yeah, good morning, Chimeze. Well, it's been a difficult 12 months for the British economy, it goes without saying. And these new unemployment figures just show that unemployment still appears to be a major issue. However, you know, this rise to 5.1%, which is a 0.3% increase on the previous quarter, isn't as bad as it could be, and this is all down to the furlough scheme. So the government have been paying people to stay in jobs. Some of the data that's been released by the ONS today does show that 3/5 of job losses over the past 12 months have affected people under the age of 25. So these are jobs that have been lost in hospitality and in retail. And even though there has been this slight increase, we do see that it does appear to be stabilizing. So for the second consecutive month, there does appear to be growth in the amount of people that are in the payroll. So in January, 88,000 more people gained employment. This is still, if you compare it to this time last year, 726,000 less than what we had last year. But it does show that people are starting to join employment again. Also as well, there are 599,000 vacancies. This is double what there were last month, even though it is 200,000 less than what it was a year ago. So this 5.1% still, again, historically, it's a 5-year low. But if we take it further than that, it isn't as bad as it could be, which is why, you know, all eyes and ears will be listening to Chancellor Rishi Sunak next week, Wednesday, when he gives his spring budget, as to how he can stabilise the labour market.
And in the meantime, business leaders are calling on Boris Johnson that his roadmap for exiting the third COVID lockdown in England remains incomplete without fresh financial support for companies and workers hardest hit by the pandemic. How will this latest unemployment data redirect government's focus in tackling the COVID effects?
Well, we do have a very brief statement from our, Chancellor Rishi Sunak, who commented on the data that was released this morning. He said, "I know how incredibly tough the past year has been for everyone, and every job is a personal tragedy. That's why throughout the crisis, my focus has been on doing everything we can to protect jobs and livelihood. At the budget next week, I will set out the next stage for our plan for jobs." And that's obviously what everyone's been waiting for. So much detail to go into about what happened yesterday and how Britain is finally going to get itself out of this lockdown by, we're told, the 21st of June. But, you know, we're only in February. You know, February hasn't ended yet, and we're not expected hospitality and retail to open to at least the 12th of April, which is a couple of months away. So even though there was a lot of excitement and buzz yesterday, you can definitely feel it in the air. There's still a long time. So business leaders are saying, look, you know, we do want the Chancellor next week to ensure that he is going to be, you know, keeping some of these protective schemes up and running while the phased lockdown does continue, and not pull the rug under people's feet.
Okay, quick one before I let you go there. HSBC has reported a 34% drop in profits for 2020 and plans to shift focus to Asia. How are investors reading HSBC's move?
Well, this is a major blow for the square mile in London. HSBC shares are trading currently down just by about 1%. In Asia, no surprising that shares were up by about 8%, and that's because the bank have looked at their profits, which are down 34%. Revenue also has fallen 10% over the past year. A lot of this is due to profitability, not just in the UK, but across the globe. But if you look at London, of course, we've got interest rates at a historic low. So many COVID impairment payments have been put in to place, and HSBC just don't feel as if it's a profitable market. So they have made a major announcement saying that they are going to be overhauling their strategy over the next 5 to 6 years. They're going to be pummeling about $6 billion into the Asia region, predominantly in the wealth management sector, where they make their most money. So a lot of the big wigs that have got really nice offices in London will be shifting to Hong Kong and Singapore over the next few years.
Okay, Juliana, we'll get more update from you later in the day.
Thank you.
And to the crypto market. Laddie, wondering what's dumping Bitcoin?
It's a sea
Correction has set
red.
in now.
It's a sea of red. Some traders believe it's the end of the bull market. Some say it's just a correction for another massive run to about 65K.
One of the speculative tendencies, and owing to Elon Musk's comments.
Exactly. Elon Musk actually said Bitcoin and Ethereum in a tweet. He said the price was too high.
After taking profits.
After, who knows? Who knows? He made about $1 billion on his investment. Now let's look at the market cap. $1.501 trillion, about $140 billion wiped off the market cap, down 11.96%. 24-hour volume up about 62%. That must be based on the massive sell-offs we've seen in the altcoin market. Bitcoin dominance, 61.70%. Let's talk to Gaius Chibueze. Hello, Gaius.
Hi, Mr. Williams.
Gaius is a sea of red. And you said it last week.
Yes.
You said expect a correction. What is causing this one?
I'm glad it actually went exactly the way I said it last week. You know, I told you it was actually overdue.
You said it.
Right? Yes.
So
people are actually, a lot of persons are buying up. That's why you see the price not down to $40,000 yet. You know, most people have been waiting for this opportunity.
Exactly. Especially Chimezie. She's been saying hopefully the price can come down so she can get in. But let's see what her move would be.
That's the time now. She has everything she wanted right now.
Exactly. So we see it dropped to about 48,000 early trade today. What are your expectations for the week?
Well, I still see the price going back to $60,000 after this correction. It might not take up to a week, but I see the price getting to $60,000 before 10th of March. This correction, if you can see the buy orders that are supporting this correction, that are supporting the price fall. The support is so strong at $48,000. So I see it going back to 50 and then heading towards 60 to make another all-time high mark.
Okay, looking at the sell-offs in the altcoin markets now, they're down mostly 20%, 25%, 30%. How should traders play the alt market at this point?
Currently down 40% right now.
40, that's a massive number.
Yeah.
Wow.
But I'm actually a long-term holder, so I'm not selling off. But most of those coins I bought last week. I wanted to just do a short-term trade to take profit. So as you know, everything that affects Bitcoin affects other coins. So this was actually expected, that if there is going to be a dip, it's just that so many persons were actually caught unawares. I set my stop loss, but I had to cancel the stop loss because I was ready to hold. Because I'm ready to hold for a long time, because most of them are very good ones.
All right. Gaius, thank you so much. Let's see how it plays out. Hopefully, the weak hands would not let their coins be sold to the stronger hands. Thank you, Gaius, and do enjoy the rest of your day. All right, Chimi, it's a sea of red.
Yeah, but still at 48K is still high for me. So
Yeah,
I don't think I'm yet ready to go into that. I really don't have that mind. Maybe just look at the alt side of it. And don't forget, the regulators keep warning, it's a risky market.
Very risky.
It's a speculative market. You can see what has happened, of course, to Bitcoin today. Yeah. Just like U.S. Treasury Secretary Janet Yellen said. She said, Bitcoin is an extremely inefficient way to conduct monetary transactions. Highly inefficient and highly speculative. And that speculative tendency is, once you say it, it drops or it goes up. Well, let's see how it goes. Maybe going to the fraction of Bitcoin might possibly, help, not buying that whole coin or whatever it is. Okay, thank you. Oh, well, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.